This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra, and on the show today, we'll put the spotlight on the rise of RIC, the Russia-India-China bloc, and how this is becoming, if at all, an envy to the US. Also on the show coming up, we will discuss why RBI is stacking up gold reserves and ditching the US dollar. And finally on the show, we'll also bring you the top 10 richest people in the world as per Forbes. No points for guessing, 9 out of 10 belong to the US. You're watching Morning Brief at 9. You're watching Morning Brief at 9 right here on News 9. First up, let's bring you all the headlines that we're tracking for you this Tuesday morning. The rise of RIC, the Russia-India-China bloc. Prime Minister Modi says India-Russia ties are key for global stability. But also not going down well with the US administration. Scott Bessent calls SCO, the Shanghai Cooperation Organization meeting, largely performative. Meanwhile, Peter Novarro, the White House trade advisor, is doubling down on his rhetoric against India. He says it is a shame to see Modi getting in bed with Xi Jinping and Putin. US President Donald Trump has claimed that India has offered to cut tariffs to nothing, but it's getting late. How valid are his claims on Truth Social? The Indian rupee has hit a fresh all-time low against the US dollar yesterday. We'll bring you what is driving down the INR as compared to the US dollar. Meanwhile, gold has touched a lifetime high as RBI stacks up the yellow metal but ditches the US dollar. On the show, we'll discuss why. And staying with the Reserve Bank of India's first quarter current account deficit has narrowed to just 0.2% of the GDP as per RBI. Not the brightest news coming from Motown as automakers report dip in vehicle dispatches in the month of August as buyers await price cut in a bid to welcome the GST rejig. And at 10 a.m. today, Prime Minister Narendra Modi is all set to inaugurate SEMICON India 2025 at Yashubhoomi in New Delhi. Let's start with the latest that we are bringing for you this Tuesday morning. US President Donald Trump has once again doubled down on his criticism of India, calling trade ties with New Delhi a totally one-sided disaster. Now, his remarks come on Monday, shortly after Prime Minister Narendra Modi's visit to China for the Shanghai Cooperation Organization summit. Now, in a Truth Social post, Donald Trump claimed India had offered to cut its tariffs to zero, but said the move was too late and should have been done years ago. Now, his comments come amid heightened trade tension, with US imposing as much as 50% tariffs on India, including secondary duties of 25% last month for India purchasing Russian oil, which India has called unfair, unjustified and unreasonable. Trump, meanwhile, accused New Delhi of selling massive amounts of goods to the US while blocking American exports with high tariffs, the highest, he said, of any country. And it's not just Donald Trump, it's also his entire administration which is doubling down on their rhetoric against India, especially in the light of the rise of the Russia-India-China camaraderie, or the RIC bloc that's shown at the Shanghai Cooperation Organization. Let's look at what the US administration is going out and saying publicly. Let's begin first with Peter Novarro, who's escalating his attack on India, and he's saying, and I quote, "It is a shame to see Modi getting in bed with Xi Jinping and Putin." Now, this is an exact quote by Peter Novarro, the White House trade advisor. And not just that, he's also saying that he is sure that Modi he's not sure what Modi is thinking and hopes that he will come around to seeing that India needs to be with the US and not with Russia. That's Peter Novarro for you, ladies and gentlemen. But it's not just Novarro. There is also a sharp criticism coming from Bessent. Mixed cues, one would call it, because at one level, Scott Bessent, the US Treasury Secretary, goes on to say that the two great countries, India and US, will get their issues resolved. But he also goes on to say that on the SCO specifically, that this is a long-standing meeting and it's called the Shanghai Cooperation Organization. And he thinks that the SCO is largely performative. Now, Scott Bessent has also gone on to say that India is the most populous democracy in the world and its values are much closer to the US than that of China and Russia. And meanwhile, of course, as we told you, Donald Trump has gone out to say and claim on Truth Social that India has offered to cut tariffs to nothing. Now remember, these remarks come in the wake of India and Russia that vowed to strengthen their strategic ties against the backdrop of New Delhi's frictions with the US, with Prime Minister Narendra Modi telling Russian President Vladimir Putin that the two countries stood shoulder to shoulder even in the most difficult times. Remember, Modi and Putin met on the sidelines of the annual summit of the Shanghai Cooperation Organization just days after the US doubled tariffs on Indian goods to a whopping 50%, including a 25% additional duties for India purchasing Russian crude oil. Now, in his televised opening remarks at the meeting, Prime Minister Modi told the Russian president that 140 crore Indians are eagerly waiting to welcome Putin in India in the month of December. Now, before the official talks, the two leaders held an informal conversation as they traveled to the venue on their bilateral meeting in the same car after concluding engagements at the SCO summit. Now, the Russian president waited for about 10 minutes for Prime Minister Modi to join him before boarding the car. Now, Modi and Putin spent another 45 minutes in the car even after reaching the venue, and this as per people familiar with the matter. In his remarks, Putin said Russia and India have maintained special friendly and trust-based relations for decades, and it is the foundation for the future development of the ties. Now, the relations between New Delhi and Washington, remember, are on a downturn after Trump slapped a 50% tariff on India. The strain in the relations has been exacerbated by constant criticism of New Delhi by officials in Trump's administration. Meanwhile, staying with the RIC and the SCO, the Shanghai Cooperation Organization Summit, Chinese President Xi Jinping and Russian President Vladimir Putin have called for a new global security and economic order at the SCO summit, using the stage to signal their challenge to US dominance, while India and Russia continued to express strong ties between the two nations. Now, speaking at the SCO meeting in Shenzhen, Xi Jinping told more than 20 non-Western leaders that countries must stand against hegemonyism and power politics and instead practice what he called true multilateralism.
Chinese President Xi Jinping and Russian President Vladimir Putin set out their vision for a new global security and economic order in a direct challenge to the United States at a regional summit on Monday. At the two-day summit in the Chinese port city of Tianjin for the Shanghai Cooperation Organization, Xi said the more than 20 leaders of non-Western countries must continue to take a clear stand against hegemonism and power politics and practice true multilateralism. Despite no concrete policies being set out, Xi's comments are a veiled attack on the current US-dominated world order. Putin, whose country has forged close ties with China amid the fallout from the Ukraine war, said the SCO had revived genuine multilateralism, with national currencies increasingly used in mutual settlements rather than the US dollar. Earlier, Xi pushed for more inclusive economic globalization amid the upheaval caused by US President Donald Trump's tariff policies. Trump's tariff war has disproportionately affected developing economies such as India, whose exports were hit with a 50% levy last week. Putin and India's Prime Minister Narendra Modi held hands as they met before the summit and appeared jovial together as they spoke with Xi, surrounded by translators. At a bilateral meeting, Putin addressed Modi as his dear friend and said relations were developing dynamically. while Modi told Putin he hopes Russia and Ukraine will move forward to end their war soon.
Mr. President, this demonstrates just how profound and comprehensive our specially privileged strategic partnership truly is. Even under the most challenging circumstances, India and Russia have always moved forward shoulder to shoulder. Our close cooperation matters not only for the peoples of our two nations, but also for ensuring global peace, stability and prosperity.
China and India are the biggest buyers of crude oil from Russia, the world's second largest exporter.
And while oil seems to be well at the RIC, all doesn't seem to go down well with the United States. Barney Chitran, Metro PE investor and managing partner, Chrysalis Equity Ventures, joins me this morning along with Mithali Nikore, founder and chief economist, Nikore Associates. Mithali, Barney, thank you so much. It's a pleasure having you here on News 9. Mithali, let me begin by asking you, the last 72 hours and the sharp criticism that continues from the US, what is your read on the rise of RIC?
So I think this is very amusing, Karthik. I think, to be very honest, we all expected that President Trump would be irked when he saw these images, and he has been sufficiently irked, and therefore he's asked his team to make these personal attacks on, on Prime Minister Modi, which are very regrettable. Because at the end of the day, when we look at, the relationship that Prime Minister Modi had cultivated with President Trump, and in many cases, President Trump had always alluded to the fact that this relationship, despite being strong, he was putting tariffs despite the respect he had for Prime Minister Modi. He had always refrained from criticizing the Prime Minister. But now I think the gloves are off, and Peter Navarro's statements are really regrettable. So honestly, it will take a lot more work to repair this relationship between President Trump and Prime Minister Modi in some ways. But of course, I think what Prime Minister Modi has shown with his presence at the SCO and with the rise of what a lot of people in the geopolitical circles are calling the RIC is that he is willing to put in the work that is required to further the interests of India and India's people. Because in this instance, he understands, of course, Russia and India have always been, in the words of the Chinese premier, ironclad friends. But, Russia and India have taken that foundation, and Russia is sort of ushering in this era of bringing India and China together. That is true statesmanship, and that is true leadership in some ways, so which would have ideally been expected from the US. So I do think that there are a lot of changes brewing. At the same time, all of this needs to be taken with a pinch of salt, because we know that only time will tell whether we can truly trust these new relationships that are forming.
Yeah, absolutely, Barnik. That's an important point that Mithali left her answer with, that only time will tell how strong these relations that are now getting forged, at least publicly, are going to be. So, desperate times, desperate measures, one would call it, or do you see a larger diplomatic as well as economic play here with the coming together of Russia, India and China?
So, I think there is obviously a larger geopolitical play here, because the tariffs on India are not just a function of economic trade and bilateralism. I think there has been lots of geopolitical undercurrents. That being said, I think it's too early to call this a firm bloc in terms of an RIC bloc. India and China relations have not been good. Even if you look at the people who showed up at the SCO, India doesn't have the best relationships with 2 or 3 other countries there. So I think it's cautious times for India to evaluate its relationship with China. We should proceed with caution, as we've had a history of being betrayed by trusting the Chinese too much. But that being said, I think 2.8 billion people, we have to learn how to coexist. We have to learn how to cooperate. And as President Xi Jinping said, I think that elephant and dragon should dance together and work together. So I'm cautiously optimistic that something is in the works, or something may happen, which is good in the longer term, but it's too early to call this a firm alliance or a firm bloc, particularly the India-China angle.
Fair enough. Mithali, now let's bring US back into this equation, and the fact that it was expected that images going viral like the kinds that we are seeing on our screen as well are likely to irk Donald Trump, and irk they have. But the sharp criticism coming from Peter Novarro, coming from Scott Bessent yet again, and this time the attacks getting personal. So at one level, does it show desperation on the side of US to quickly go and stitch up a trade deal? Because Donald Trump has also gone ahead and posted on Truth Social that India has offered what he claims pretty much nothing, zero tariff regime into US goods coming into India. So these personal attacks, this constant sort of, egging India on and really trying to make a statement against India, is this in a desperate bid to get India back on the table? Is India that indispensable for the US? Or is this just frustration playing out publicly?
No, absolutely, Karthik. I think, every time Peter Navarro says, oh, why is he? And when he says he's of course referring to Prime Minister Modi in a way that is highly disrespectful, speaks to Putin, etc., and he makes these comments. I would like to remind the US administration that just 15 days ago, the US president met with President Putin in a bid to, of course, de-escalate the Russia-Ukraine crisis, but also they had other discussions. And the US continues to import raw material for its own nuclear plants. It continues to import several varieties of fertilizers from Russia. It continues to trade with Russia. So the US is allowed to maintain its relationship with Russia, whatever shape or form that may take, but India isn't. Why is that? I mean, again, India is not a vassal state of any country. And, that is something that really needs to be drilled down into the minds of people like Peter Navarro, who are coming out and really just criticizing our actions without realizing that we're a sovereign country. So, I mean, definitely it is irking the administration that they could not push India into a corner, that they could not get India to open up its agricultural markets. They could not get India to agree to their terms, because India only negotiates as per the terms that would be viable for our farmers, for our poorest, for our marginalized. We may be a poor country compared to the US, but at the same time, we know that we are the fastest growing economy in the world. So, of course, India would be economically indispensable for any economy that seeks to sustain in the West.
All right, but Barnik, some would argue that even Donald Trump is acting in the best interest of his own constituencies, in the interest of US citizens. But again, coming back to the moot point, and that happens to be trade talks, which have now stalled. There's no guarantee and there's no surety on whether and when, if the trade talks are going to resume. So what is the way forward from here? How do you see it? Are we now stuck, locked in this 50% tariff, or do you see over time there is going to be coming back on the table, there is going to be some sort of a give and take, and India will have to wiggle its way out of this 50% tariff and try and mend ties with the US, even though at one level it is showing its defiance by, in some measures, being overtly friendly, at least visually, optically, to Russia and China?
I think, Karthik, the ball is fairly and clearly in the courts of the US, right? In the hands of the US. To be fair, we should not take too much of what Peter Navarro is saying at face value, because I think he doesn't have a formal role in the administration other than being an advisor. I think Scott Bessent's comments are, far more indicative of where the US administration is. I think he has signaled the intent of doing a deal. I think, to be fair, the onus of getting a deal done rests more with the US than with India. I think a lot of the unilateral actions taken by the US, and let me stress on the word unilateral, right, have been taken with other considerations in mind, right? Whether they be the upcoming Russia summit, or even if you'll follow the New York Times reporting over the last couple of weeks, it's the reluctance of India to give credit to the US for reducing the tensions in May. So there are many other variables at play. I think the Indian side is always ready to negotiate. I think it's up to the Americans as to when do they want to strike a deal which would be fair to both sides, given India's red lines have always been clear on agriculture and GMO. With that in mind, there were rumors that there was a trade framework which was nearly agreed last month. But then, as I said, all the actions over the last 30-45 days have been solely unilateral by the US. So it's completely up to the Americans when they really want to come back to the table and negotiate something which is free and fair. But I do expect, with a lot of other geopolitical issues sorting itself out or not over the next quarter, maybe people will be back at the negotiating table and there may be a framework maybe in a quarter or two.
All right, Barnik, Chitran Mehta, Mitali Nekore, thank you so much for your time this morning. Let's leave it at that for today. And with that, we will slip into a short break. But coming up on the other side, we have Rohit Srivastava, founder and market strategist, IndiaCharts.com, giving us a sense of what to expect in the markets this morning. You're watching Morning Brief at 9.
Dreaming about me.
Love is to get lost in the look. Unlimit Love B6 Pack 2 starts at 21.9 lakh.
ये बेस्ट है सर।
हमेशा वाला क्यों नहीं?
मिश्रा जी, आपके लिए फूलों की बरसात, बिरला ओपस एश्योरेंस देने के लिए।
मतलब प्रोडक्ट वारंटी?
वारंटी तो है ही, ये एक्स्ट्रा है। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री।
फ्री?
पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। रजिस्टर करो birlaopus.com पर।
This is nothing. My score is 5 stars. तेरे को पता है मेरी स्कोर ना ऑटोमेटिक है और वो भी 7 स्पीड। कुछ भी। Hello guys. My Skoda can fly to Jupiter like a rocket.
Skoda. Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9. Let's bring you all the action from the Lal Street as markets have opened just a few minutes ago. More or less flat, although a little bit in the green. So nothing really to write home about in terms of being scared about the outlook for the day, at least what the first few minutes of trading are suggesting. Remember, a slew of news which should have played out on the markets, but we are seeing a muted number on the screens this morning. The slew of news beginning, of course, from India's current account deficit narrowing to 0.2% of the GDP. PMI for manufacturing being at a 17-year high as almost 59 odd levels on the scale. And of course, we also have negative data coming from automakers. At the month of August has seen tepid sales numbers and fewer dispatches as customers await the GST REJIG. Numbers on the screen for you. The Sensex and Nifty more or less in flattish territory, up about 0.1% or so. Nifty 50 holding below the 24,700 odd levels. Meanwhile, Sensex comfortably above the 80,400 odd levels, but 80,000 is not pretty much something that investors who've been invested in the market for long, seeing their investments dip over the last 1 year or so, would be very happy about. Meanwhile, the small cap and the mid cap space also more or less flat. Small cap outperforming the larger benchmark indices, up about 1/3% at about 17,500 or so. Volatility in the Indian market seems low this morning, down to about 11 odd levels. Let's pull up the Nifty 50 heat map and try and see which are the sectors and which are the companies which are leading the market mood this morning. Well, the auto sector, like we told you, the data in the month of August not looking very good for automakers, but hopefully festive season and the GST-driven discounts are likely to spur up momentum in that sector. But as you're speaking this morning, Maruti Suzuki, Mahindra, both down about 0.5 percentage point or so. Tata Motors is down about 0.4 percentage point. Meanwhile, the IT sector also seems to not be very excited with all the news that's happening in the world, especially now what Donald Trump and his entire administration is is really talking about India. So we've seen Infosys down about 0.75 of a percentage point, HCL Tech down about 0.3% or so. The cues on the banking side seem more or less mixed. HDFC, ICICI Bank more or less in the flat territory. SBI also almost flat. Reliance, which had taken a major beating yesterday, is up fairly handsomely, and this seems to be the one stock which is driving up the broad indices and the benchmark indices this morning. Reliance Industries is up about 1.4%, seemingly coming from the show of strength and camaraderie at the SCO between India and Russia. Prime Minister Modi as well as Russian President Vladimir Putin, both really showing the world in a sense of defiance that India and Russia are continuing to be close allies. Well, Rohit Srivastav, the founder of India Charts, joins us this morning. Rohit, good morning. Pleasure having you here with News 9 this Tuesday morning. Help us understand, put into perspective the charts that we are seeing on the screen and the numbers that we are seeing on the screen. What do retail investors make of this? Is there a trajectory that can be outlined on where markets would be headed from here on?
So you see, the near-term trend has been down, and I do believe that we can continue to see weakness in the weeks ahead into maybe mid or end of September before we start getting a meaningful recovery. Okay. In terms of levels, I think till we don't cross, say, 24,700 in the near term, we could still, be in that downward trend and could go back to retest maybe 24,300. And similarly, if we look at the bank index, I would put those levels at around 54,200 and on the downside around 53,300. So that's the near-term thought that, unless we can really get past some key short-term resistances, the trend is still down and it could continue to be that way for a couple of weeks.
All right. And just about 3 weeks or so, 22, 23 days to go, Rohit, until the first anniversary of Sensex Nifty hitting their lifetime highs last year. And what a journey it's been. The kind of volatility we've seen, the kind of sharp corrections we've seen. For the long-term investor who had stayed on in the markets and had made some more investments during those lifetime highs, now seeing almost an entire year gone by and we're looking at almost 6,000, 7,000 rupees points worth of correction on the Sensex. What should the strategy of those investors be?
So, for long-term investors, this is essentially a market in which you try to stick to your guns. If you have positive cash flow, you actually would try to add on the dips because you want to grow your portfolio. Good time to even judge where growth doesn't continue, specifically in mid and small caps. At least one thing is clear, that the mid and small cap segment is growing earnings at a faster pace than the large cap. So the thoughts that people had last year that, the broad market would underperform the large caps, that's not really happening. In fact, it's the reverse. The only thing which has happened is that within mid and small caps, you have to really clear out the ones that are not able to keep up. So if valuations have gone up and your earnings growth is not adding up, those stocks are being left behind by the market. But there are segments, outside of that where you're actually seeing positive performance as well, and the market is, rewarding those as well. So I think that part of the cleanup is what you would have been able to do in this last 1 year in terms of rejigging your portfolio a little bit.
Right.
But if you stick with the performers and with some of the themes, then you should continue to do well. Even if we just look at the last couple of days, for example, this sell-off from the 21st August down, we actually have strong performance in a couple of sectors.
Okay.
This could be the auto sector for one, second is consumer durables, and the third is the manufacturing, related sectors, which have something in common with the consumer durables. But basically, these are areas that we've seen outperform. We've actually seen IT also hold up a little bit this time.
Right.
IT is not my favorite though, but I think the other segments do have a good reason for continuing these positive trends.
Right. We will talk about your not too favorite IT sector, but first up, let's bring up the charts for the auto sector and the consumer durables sector. And in fact, you did mention the auto sector, and the auto sector seems to be reeling under pressure. This could be the data that we saw for the month of August. Dispatches have been down, but a better time, festive season awaiting. So at these levels, when you're seeing the kind of price correction in stocks like Maruti Suzuki and M&M, would you suggest this is a good time to dabble into auto stocks, given that we know auto prices, at least by way of the tax incentive, the GST, are likely to come down and the festive discounts are around the corner as well?
And keep in mind that interest rates have pulled down.
Absolutely.
And if the government really wants to step in and do more beyond the GST, you might even see further rate cuts. In line with what might happen around the world, we are also seeing the US pushing towards rate cuts. So all of that is supportive. So I'll not look at only the one-day move, which is why I mentioned that the outperformance in the auto sectors happened over the last 10 days. They've actually gone up, especially two-wheelers have done pretty well. Everything from Hero MotoCorp to, TVS Motor have actually outperformed. So I think the sector on every dip is giving an opportunity to, be picked up for what lies ahead. The auto sector should do well.
Auto sector should do well, but I'm also looking at the IT sector, not your favorite sector, Rohit, but the IT sector also has been pretty much a mixed bag, mostly on the negative side this last entire 1 year, especially since Jan the 20th when Donald Trump assumed office. Now, the Nifty 50 IT stocks have continued to underperform, and that trend seems to now be troubling investors who have invested in the India IT story. Again, a plethora of items surrounding it, one of course being the US interest rates, the second being this entire advent of artificial intelligence, and many saying that the Indian IT story is not geared up for that. At the same time, we've seen better performance from companies like Coforge and Persistent Systems. So as far as the large cap Nifty 50 IT companies are concerned, what should investors do at this point?
No, you got that right. So the approach here has to be very bottom up. It can't be top down. You simply can't go and pick the large caps within IT. In fact, most large caps in IT over the last 10 years have behaved like a defensive sector. When there's nothing to buy, people end up buying tech stocks because they'll at least give you that 5% earnings growth or 5 to 8% earnings growth that they've been giving over a long enough period of time. But 5 to 8% earnings growth is not very, very attractive when you're in a market where, the Nifty was growing earnings at double digits or more, and the broad market and mid caps were doing even better. So in that sense, I think the IT sector has just chugged along with the rest of the market, but it's not the place where you're going to make the big returns. If you have nothing in mind, you go and buy some IT. It might provide you defense. It might even help you because the currency is weakening. So in that sense, some people might look at it. But overall, it's not the large cap IT has not been the growth area of the decade. So it's lagged behind most other sectors over a period of time.
No doubt about that. Rohit, I can't let you go without really talking the stock which is really driving the index up this morning, and that happens to be Reliance Industries. The stock is up about 1.6% or so in early trade. Now, of course, this coming on the back of, again, a plethora of news. To begin with, of course, the show of strength, the camaraderie between Russia and India on display. One IPO a year going forward until the next 5 or 6 years. So overall, investors who are locked in, or those who are not into a Reliance stock at the moment, is this a good time to accumulate some Reliance shares and really hope for the IPOs and the sort of split, the demergers, which are going to potentially yield more value? Or do you think time to be cautious because we don't know how global trade dynamics are going to play out?
Yeah, so see, Reliance, you're right. It's played a big role in this sell-off as well because it's the center of this entire oil fight.
True.
And as long as that oil fight goes on, it's hard to imagine that it starts to, perform again. At the same time, when it does, it becomes very positive for the market. In fact, the oil and gas sector, even in the same time period that I was talking about, 21st August to now, has been among the worst performing sectors. So that pressure point remains. I can't specifically give a recommendation because, we are not advisors, but it's just my thought that till this headwind is not behind us, we should probably not be in a hurry, to get back into this part of the market.
All right, Rohit Srivastava, let's leave it at that this morning. Thank you so much. As always, a pleasure having you here with us on News 9. Now, staying with investors and stories of interest to investors, retail investors, and especially in the run-up to the festive season, gold prices in India have hit an all-time high yesterday, crossing 1,05,000 rupees per 10 grams. And the Reserve Bank of India, too, has been gradually shifting the composition of its foreign exchange reserves, leaning more in favor of gold and reducing its exposure to the US Treasury bills and the US dollar. Now, data from the US Department of Treasury and the Reserve Bank of India shows that while India remains a significant investor in US debt, the pivot towards bullion is becoming clearer. Now, the changing global environment marked by trade conflicts, geopolitical tensions and concerns over the US's rising fiscal deficits is prompting central banks worldwide to rethink their reliance on the dollar and perhaps double down on gold. Now, India's investments in US Treasury bills fell to just $227 billion in the month of June compared with $242 billion in the year-ago period. Now, over the same period, the RBI added as much as 39.22 metric tons of gold, taking India's total holdings to 879.98 tons as of June 27th of this year. Now, the tilt towards gold marks a step towards reducing dollar dependence, though treasuries still account for a large share of India's reserves. Now, despite this reallocation, the overall reserves remain robust at around 690 billion as of August 22nd this year, ensuring India still has significant dollar cushion. I have my colleague, Executive Editor of News 9, Amit Kumar Ranjan, joining me this morning with updates on this story. Amit, good morning. Thanks for your time. Now, why is India increasing its gold reserves, and why is India, what some are calling, ditching the US dollar? What's going on really?
Good morning, Karthik. It may have to do more with geopolitics than geoeconomics. Over the same time, as you mentioned, that India increased its gold reserves and reduced its US Treasury investments, the dollar has remained strong. It has gone from 83 levels to 89 levels, so it has remained strong. So it has more to do with geopolitics than geoeconomics, with the growing volatility in the geopolitical scenario worldwide. The dependence on something that is a safe haven has increased, and it's a trend worldwide that we are seeing. Most of the countries are moving from their dependence to the dollar towards something that is more stable, that is gold.
Just an India-only phenomena, it seems to be more of a global phenomena now taking shape. But help us understand and especially what you're reading in terms of analyst predictions. Now, we have festive season around the corner. You're already on the 2nd of September, just about a month or so to go for the festive season to kick in. Now, gold usually becomes a preferred choice for people to go and buy at retail stores across the country during festive season. Now, gold at already 1,05,000 and potentially with this trend of central banks buying gold, the prices expected to only shoot further. What are analysts predicting? Where is this gold rally going to ebb out?
We are at 1.05 lakhs right now, and if we go by the projections by most analysts, by the end of this year, it may touch 1.08 or even more. With geopolitics taking a turn to the worse, it may go even further. Remember, geopolitical volatility has been there for the last 1 year, and last year around the same time, gold was at around 69 levels. So it has come that far because of the geopolitical tensions. And yeah, as you mentioned, with the festive season in India around the corner, the projections are that by the end of the year, there will be 1.08, gold will touch 1.08 lakhs per 10 grams.
All right, and when 1 lakh made headlines, it was, of course, the biggest talk of town, and now we are looking at an 8% appreciation on that in just about a year or so. But finally, coming back to geopolitics, Amit, that you were speaking about, and this entire geopolitics centers now around US versus other blocks, and one of those blocks happens to be the BRICS. And of course, we've seen at the SEO the rise of camaraderie between India, Russia, as well as China. Now, what the US has always mentioned as a threat to the hegemony of the US dollar happens to be a BRICS currency. Now, again, putting all this into context, a hedge on gold versus the US dollar, not just India, rest of the countries doing it as well. Is there now a more likely scenario of potentially a BRICS currency taking shape?
It seems to be, and like I said, it's a global trend. India has reduced its investments in US Treasury. But so has the biggest player, which is the third largest investor in US Treasury bills, that is China. Their investment has gone down over the last year from $780 billion to $756 billion. Yeah. Now, if China too is making that move, and China happens to be the biggest player in the BRICS group, then the likelihood of a alternate to the dollar in the form of a BRICS currency does look a possibility around the corner.
All right.
With the way geopolitics is going, you cannot predict anything for sure, but it does look like a real possibility now.
A possibility, perhaps not a probability, as some stated. But Amit Ranjan Kumar, thank you so much for your time this morning. Well, let's move on now. As the US stock markets have hit new highs last month, the combined net worth of the top 10 richest people on the planet has increased by just 1%, or that's about $21 billion to $2.13 trillion cumulatively. The 10 richest people accounting for $2.13 trillion worth of net worth, and this as per the new report published in the Forbes magazine. Now, driving the modest gain was the fact that August was a mixed month for the world's wealthiest, with 6 becoming richer and 4 becoming poorer, as several soaring tech stocks have reiterated. Now, the biggest gainers were Alphabet's Larry Page and Sergey Brin, whose fortunes popped by $20.3 billion and $15.1 billion respectively. Now, shares of the search giant jumped by nearly 9% to record high. Now, Page held steady at number 5 as the richest person in the world, while Brin moved up one rung to number 6. Now, the Google co-founder took the spot of Nvidia's Jensen Huang, who slipped to number 9 as his fortune fell by 3.5 billion shares. Now, a lot of chatter, but August's biggest loser was July's winner, Larry Ellison, co-founder of Oracle, who lost nearly $29 billion after having gained $37 billion in the previous month. Bernard Arnold, the only non-American among the top 10 richest, moved up to number 7 from number 10 thanks to an $11.2 billion increase in his net worth. And of course, topping the list has to be none other than Elon Musk. Well, these are the top richest people in the world as we speak. Well, before we slip into another short break, let's look at the global stories that we're tracking for you this morning. Chinese President Xi Jinping and Russian President Vladimir Putin call for a new world order at the SCO summit, challenge US dominance as Prime Minister Modi highlights India-Russia partnership and urges peace in Ukraine. US President Donald Trump tightens grip on US agencies with high-profile firing, sparks warnings over political influence and Federal Reserve interference. Asian stocks rise as dollar nears 5-week lows and gold hits record high ahead of key US economic data and Federal Reserve rate decision. China's factory slump extends to 5th month as tariffs, property woes and weak demand threaten 5% growth target, while Japan's manufacturing slowdown deepens on falling export orders. Tesla sales slump for 8th month in Europe as competition from Chinese rivals grows and Musk's far-right support fuels backlash. Staying with the auto space, BYD shares tumble after first profit drop in 3 years as production falls for second straight month. Samsung and rival SK Hynix shares fall as US revokes China chip equipment exemptions, raising risks for a third of their output. Nestle outs CEO Laurent Fricks after undisclosed relationship with subordinate. Board confirms probe findings. Veteran insider Philippe Narveli's named successor. And Eurozone manufacturing expands for first time in 3 years as Greece, Spain drive growth. German output nears recovery while Asia factories struggle under US tariffs. These stories and more on the other side. You're watching Morning Brief at 9.
Power of Digi-Alkaline from Nippo Thor.
Papa, let's go to Duda. Happy birthday, Duda. Duda, I love you. Go, Duda, go. I love my Duda. I love my Duda.
Score condoms?
It's over there.
क्या ये different sizes में आता है?
Actually, sir, size matter नहीं करता.
तो फिर क्या matter करता है?
The hardness
Of the condom.
of what's inside.
For the first time ever, presenting Hard Rock Gel.
अब free हर Score condoms के 10 पैक के साथ.
Welcome back. You're watching News 9. Let's bring you all the global stories that you're tracking for you on the morning brief at 9. US President Donald Trump is tightening control over federal agencies, firing 3 senior officials in just 3 days. The White House says they didn't align with his agenda, but Trump made clear he wants more loyalists on the Federal Reserve's board to push for lower interest rates, which critics say could weaken trust in independent institutions.
Policies are lifting everybody.
US President Donald Trump is pushing for more control over everything the federal government and its agencies do, according to experts in presidential authority. They say a string of high-profile firings last week could undermine public trust in agencies that are meant to provide expertise while operating above party politics. In 3 days, Trump fired Federal Reserve Governor Lisa Cook, Centers for Disease Control and Prevention Director Susan Monarez, and railroad regulator Robert Primus. The administration has said Monarez and Primus were dismissed because they did not align with Trump's agenda. Monarez had resisted changes to vaccine policy that she believed contradicted scientific evidence, according to a close associate. Primus's social media included posts that could be read as critical of the Trump administration. Jane Manners, an associate professor of law at Fordham University, said Trump's firings could generate risks to institutions Monarez and Primus belonged to.
People who are in charge of making these really important decisions about safety of consumer products, public health, our economy. We don't want those people to be influenced by political pressure. We want instead their decisions to be based on expertise. They want them to be kind of bound by the rule of law. We want them to be based on evidence. We want them to be kind of subject to the rigors of decision making absent political pressure.
Meanwhile, the administration has accused Cook of mortgage fraud, which she denies. But Trump made clear another reason for her removal. He said Tuesday at a cabinet meeting he'll soon have a majority of loyalists on the Fed's Board of Governors, which helps set the interest rates that Trump wants lowered. Most US presidents steer clear of commenting about the Federal Reserve, let alone influencing monetary policy or knocking members off the Board of Governors. But Trump has challenged the norm.
In an unprecedented place already. How far it will go depends on how institutions and people respond, right? How will the courts respond? How will the voters respond? How will states respond? All of these things really matter right now for determining that future, for determining whether or not we end up in a truly authoritarian world.
Unlike ambitious US presidents who preceded him, Trump has so far faced little opposition from the co-equal branches of Congress and the Supreme Court. His decision to impose sweeping tariffs on other nations, which rattled markets, came despite a provision in the Constitution granting Congress the power over taxation and tariffs. A federal appeals court on Friday said Trump's approach had overstepped his authority in imposing tariffs. Daniel Farber is a constitutional law professor at the University of California, Berkeley.
He reduces a tariff and then something else happens and he changes his mind and raises the tariff. But what stays the same is the use of presidential authority, or what he at least believes is presidential authority, to make decisions that have really vast consequences for the economy, without any specific congressional authorization to pursue this policy. You know, part of the constitutional scheme, it's not just that the courts could operate as a check, but Congress is supposed to be active in protecting its own rights and in, sort of generally standing up for, the interests of society where Congress disagrees with the president.
The conservative-dominated Supreme Court has also approved of some of Trump's assertions of executive authority. That includes his ability to fire members of nominally independent regulatory agencies.
And moving to stories from Asia now, China's manufacturing sector shrank for the fifth month in a row in the month of August, with Japan showing similar weakness. Both economies are grappling with the fallout from US President Donald Trump's sweeping global tariffs. Economists warn these challenges could derail Beijing's goal of 5% growth this year.
The cold streak goes on for China's factories. Figures out Sunday showed manufacturing activity shrinking for a fifth straight month. The official Purchasing Managers' Index did edge up to 49.4 in August, but that's still below the 50-point mark that would indicate rising activity. The country's economy faces headwinds including US tariffs, an ailing property sector, and rising fears over job losses. Economists say all that could derail Beijing's bid to hit growth of around 5% this year. In August, the US and China extended their trade truce for another 90 days. That locked in place 30% US levies on imports from China and 10% Chinese duties on goods going the other way. Beijing policymakers have ramped up consumer subsidies as one response in a bid to boost demand. But domestic spending remains weak, with sentiment sapped by the prolonged slump for the property market, a key store of household wealth. There was a similar story in Japan on Monday. The manufacturing PMI there held below 50 for a second month. An economist at survey compiler S&P Global said the big concern there was a sharp drop in new export orders, which fell at their fastest pace in nearly a year and a half.
And moving to Europe now, Tesla sales slump for the 8th month in Europe. The electric car maker is under pressure from Chinese rivals and traditional automakers stepping up their EV game. Now, adding to the challenge, CEO Elon Musk faces a backlash over his support for far-right parties, which has further weakened the Tesla brand image.
Tesla's sales woes in some European markets dragged on to an 8th month in August. The electric vehicle giant was hit by competition from both Chinese rivals and traditional automakers. A backlash against CEO Elon Musk's support of far-right parties has also continued. Car registration numbers from France, Denmark and Sweden showed Tesla's revamped Model Y had little impact on stopping falling sales. Data from France on Monday showed registrations of new Tesla cars fell over 47% in August against the same month last year. That was despite the overall car market growing over 2%. Tesla registrations fell more than 84% in Sweden and dropped 42% in Denmark. Norway broke the trend with registrations up more than a fifth, but China's BYD saw their numbers fly up 218%. Tesla has several problems in Europe. The company has a small aging lineup and hasn't released a new mass market model since the Model Y 5 years ago, while new Chinese rivals and traditional automakers are flooding the market with fresh designs. The EV giant's competitive problems have been further affected by Musk's politics. He helped bankroll Donald Trump's US presidential election win last year, and he's shown support for European far-right parties, which has led to a fierce consumer backlash.
Now staying with Europe, Swiss dairy giant Nestlé has abruptly dismissed its CEO Laurent Freeks for failing to disclose a romantic relationship with a subordinate. The Swiss food giant announced the decision on Monday, just a year after the CEO took charge. The board of directors launched an investigation into the matter, though the findings were inconclusive. Still, Nestlé said the lack of disclosure violated company rules and called for the CEO's removal.
To get your supply chain shorter.
Just a year after taking the reins, Laurent Freeks was abruptly dismissed as CEO of Nestlé for failing to disclose a romantic relationship with a subordinate. The decision was announced by the Swiss food giant on Monday. A company spokesperson told Reuters concerns about a possible relationship between Freeks and a direct report first emerged in the spring through an internal company hotline. The board of directors immediately opened an investigation into the matter, which was inconclusive, this person added. As the concerns persisted, the company launched a second probe which confirmed the relationship. According to the spokesperson, Freeks had initially denied the relationship to the board. The maker of products ranging from Kit Kat to Nesquik has appointed veteran insider Philip Novarro as Freeks' successor effective immediately. Nestle shares have fallen 17% over the past year, lagging its rivals in the broader market.
And as we end the show, let's end with these spectacular visuals. US astronaut Don Pettit captured a stunning red aura from the International Space Station, a rare sight that appears only a few times per 6-month missions. The deep crimson lights form when charged solar particles collide with atoms high in Earth's upper atmosphere, over 150 miles up, where the air is thin and solar activity is intense. And that's all we have for you on this edition of Morning Brief at 9. Thank you so much for watching, but news continues right here on News 9, so stay tuned.
Uttarakhand has been witnessing heavy continuous rainfall this season. Why did this happen? This is happening because of us, humans, and that's the fact. That whether it was an impending climate change, what should state governments be doing, sir? If we do not nurture Himalayas, Himalayas will not nurture us. After targeting India on its alleged high tariffs, New Delhi